Now, despite being second Africa's biggest oil producer, Nigeria imports petrol, diesel, and processed petroleum products because refineries were run down over the years. This hits the countries in the runoff to the February elections, that's presidential elections. Today, Dangote Petroleum Refinery, Nigeria's largest single investment with 435 megawatts power station, deep sea ports brings hope of an end to the nation's recurring fuel shortages. But a lack of crude supply poses a major risk to its achieving its full production. Joining me to assess the impact of this on Nigeria's oil and gas industry and the economy in a general perspective is the Director, Research and Strategy at Chapel Hill, Denham, Mr. Tajuddin Ibrahim. Good afternoon. It's good to start the week with you on the show. Mr. Ibrahim, thank you so much for your time. Okay, Mr. Tajuddin Ibrahim, can you hear me now?
Yes, I can hear you now.
Thank you so much. It's good to have you on the program. 650,000 capacity, that's barrels of crude per day, is what this facility can process. First, let me say, in general terms, what is your reaction to the final inauguration of this project?
Thank you very much. I believe that, the commissioning of the project today is a very positive development, not just, for Nigeria as a country, but also for, the entire continent of Africa. And I think that is already indicated by the presence of a couple of African country presidents at the, refinery to support Nigeria in terms of the commissioning. So it is a remarkable event, and it is a major development that will positively reflect on Nigeria, on Nigeria's economy, because of the enormous opportunities around factors such as job creation, around factors such as savings for the country, and also around factors such as economic activities that will bring, a lot of other benefits to us as Nigeria. So I see it as a major positive development in those regards.
5 presidents from other countries attended this event, and it's very likely that Dangote, who actually is in this to make money, might want to get crude from some of these countries aside from Nigeria. What sort of competition do you see in the market following this inauguration?
My expectation is a healthy competition. If we consider that this is a business owned by a private investor in large quantity, we recognize also that the Nigerian government has some ownership in it, but Dangote owns the bulk of it. So the focus will be for the business to tap into opportunities across the world. There are 3 continents that have been identified as sources of crude oil for refining. Number 1, Africa is on the forefront. It will not only be Africa. We also have Asia. We also have America. So those are the 3 continents where Dangote will be getting crude oil from to refine, because it is a private business, and it is within the decision of the owners and the management to to decide where, the crude oil will come from. But I reckon that, Nigeria will be on the forefront when we are looking at, the overall business of, Dangote Refinery. Number one, because the Nigerian government has an equity stake in it. Number two, the NNPC has committed to supplying about 300,000 barrels per day of crude oil to the refinery to be refining. And that looks like 46% of the entire capacity of 650,000 barrels per day. And that, to my mind, leaves room for the remaining sort of 54%, to be supplied by, countries in Asia, countries also in America. I, broadly speaking, expect, healthy competition, particularly bearing in mind that, number one, the business is sitting in Nigeria here. Number two, the government has a stake in it. And also, number three, the NNPC has committed to that volume of crude oil supply to Dangote Refinery on a daily basis. So I expect, all this to be supportive of a healthy competition, in my view.
Interesting stuff. Now, some would also argue that it's high time for government to speed up the rehabilitation process. Of course, one ongoing at the Port Harcourt Refinery, and we expect others to follow suit. But many would think that if government refinery should work side by side with Dangote Refinery, which has been inaugurated today and production is expected very shortly, we might say goodbye to importation of petroleum products. That's refined petroleum products.
Yes, and indeed, there will be goodbye to the importation of petroleum products. And I think, to my mind, there is a particular commodity that, we can learn from based on our previous experience in this country. And that commodity is cement. As at year 2010, 2011, Nigeria was still importing cement into this country. We remember that, Dangote built huge, capacity at Abajana, where we have, excess capacity even for what Nigeria can consume in terms of, cement. And since like 2016, like 5 years after that, Nigeria became, a country that not only produced to cater for locally, produced, cement, but also exports after consuming the portion that it can consume. So if we link that experience to the refinery business, what I comfortably can say is that after taking care of local demand, Dangote Refinery will also be in a capacity to export to other countries. And if we speak about the government-owned refineries, my sense is different from the many others. My sense is that the government should consider selling those assets and put them in the hands of private investors. They can own some stake in it, but for efficient running of those refineries in Port Harcourt and Kaduna and some other ones, the government should look to divest significantly, put them in the hands of private investors, and let them run them as efficiently as they can. With that, we will have a much healthier competition. Then Dangote will also bear in mind that there are competitors in that space, and he is not a dominant player, just like we have it in the cement space. Those are my views.
Interesting stuff. A 435 megawatts power plant is also in that facility that talks or speaks to our challenge with regards to energy, and a lot of investment would have obviously got into that, and naturally that wouldn't have been part of it if we had that infrastructure. Now, what effect do you think all of this lack of infrastructure and all of that have on investments generally across the country? Some would say it makes the country less attractive.
They are very correct. The lack of required infrastructure for businesses to grow and, succeed in any economy will, generally speaking, slow down the ability of that country to attract foreign investment into the country. And Nigeria is in that situation as we speak. But my mind tells me that what the country can do is to, number one, ensure that the government provides an enabling environment for businesses to start up, for businesses to grow, for businesses to also be able to succeed and grow under such enabling environment. If the government is able to do that, my mind tells me that we probably are going to see foreign investors spring up locally, and we will also see them come in from the outside of the country to come and invest in various sectors of the economy. And the energy sector, the power sector, in this case, is very important. We most likely are not going to see foreign investors showing interest in our power sector if the government does not make the environment friendly for them to come in and invest. And also in terms of policies, we must have the right policies. We must have incentives in place in terms of possibly tax holidays, tax cuts. For instance, all those will attract more foreign investors into the country. Looking at us locally, we have seen two key investors in the power sector, for example, which that is, we have seen Tony Elumelu, we have seen also Femi Otedola, and we probably are going to see more local investors take interest in the power sector. All that is needed, in my view, is for the government to be supportive and eliminate
we expect to reconnect with Mr. Tajuddin Ibrahim there to complete his thoughts with regards to eliminating, I'm sure, the bottlenecks, disturbing the actualization of ease of doing business across the country. That remains very important. Okay, we lost I think network issues there, but we have you back. You were saying we need to eliminate.
We need to eliminate risks. The government has to eliminate risks, as much as possible, so that investors, either local investors or foreign investors, are encouraged to be supportive to invest in infrastructure projects. We also should consider accelerating, government plans around PPP, that is public-private partnership, around developing our country as a whole in terms of infrastructure. If we do all this, my sense is that we are going to see the benefits in the long term, and those benefits, to my mind, will be enormous, I believe.
Well, you won't blame the NNPC GMD, Amalamere Kyari. During his speech, he mentioned the almighty subsidy, which most people avoided to mention at this gathering today. And he talked about how scary it's becoming, servicing millions of naira almost on daily basis, billions of naira now, as the case may be. And he's saying that this is unsustainable. What are you thinking? Refining is just a step to deregulation. Subsidy removal is also a step to deregulation. What is your take about a deregulated market, particularly with the downstream of Nigeria's oil and gas sector?
I think a deregulated market is inevitable, and the earlier we realize it and embrace it and run with it, the better for the country in terms of the benefits that could accrue. Particularly from, number one, the ability of the government to direct all those subsidies to other useful projects, particularly those that are linked to investment in infrastructure. When we invest that kind of subsidy money in infrastructure, the benefit will be more material than what we currently are experiencing in terms of those subsidies. No doubt there will be economic hardship for many Nigerians as petrol prices will go up on the back of removal of subsidy. But we should look at the big picture. That is the way I see it. The myopic view every one of us or many of us have is we are buying petrol at a subsidized rate, and we probably do not want that to go. But it has to go because the government cannot sustain it due to their revenue challenges. Number two is that if they direct the money, if they channel the money they are using as subsidy to infrastructure, the benefit will be a lot more, for all of us as Nigerians. So I agree with the group managing director of NNPC around the removal of subsidy. And we also will benefit whenever global oil prices crash. We are going to see petrol prices also come down. Those are some of the benefits that we should be considering, and they come as long-term benefits and not so much of short-term benefits, in my view.
Well, interesting stuff there. We are still lagging behind, kind of, in our production quota. We're not doing pretty well. I think a little bit lower than 1 million barrels per day in recent times. What is your outlook for the entire sector, considering this positive that we've recorded at this time?
I think the outlook is positive, but the government needs to, do more and intensify their efforts around securing the oil pipelines. Because security seems to be a major consideration when we, talk about our oil output. Even the OPEC quota that, has been assigned to us, we have not been able to produce anywhere close to it, largely because of, attacks on oil installations and also, because of, theft. So if those two are addressed and the government is determined to reduce all those elements, then we will be talking about increase in production. And I see this as a major risk. By the time the Dangote Refinery begins to refine, it should never happen to us as a country that we do not have enough crude oil to supply to him to refine for all of us to use in form of either petrol or diesel or kerosene. That is one thing that the government must ensure does not happen. And that can be addressed if they step up security, in my view.
Beautiful conversation. I must thank you so much for your contributions. Director, Research and Strategy with Chapel Hill, Denham. Mr. Tajuddin Ibrahim, do have a profitable week.
You too.